if your real estate values stay the same and the value of the dollar you're comparing it to fundamentally drop an immense amount, like that is also equally bad. What is going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. It is just me, Mike DeHaan, and Dylan Cook today. Danger Dan Austin is not here. Is he gonna? I need like a worse nickname for him because he like keeps putting you on blast.
I can't believe the last week you guys actually left it in the freaking recording.
Oh, it's fine. Nobody catches up on those. Everyone respects you too much for that. But what's going on, guys? It's first time here. This is a real estate operator show by real estate operators for real estate operators. And we like to talk about real estate, business, the economy, and, you know, how to continue making money so that all the shit that's going on in the world doesn't affect you as much as it is for all of your poor friends. So cool, man. Well, appreciate you hopping on with me, even though Dan was out. And something I wanted to start with, because I feel like this is a really relevant topic. So it is a little bit like higher level economic thinking, but I think it's super relevant because I feel like one of the most common conversations I see happening right now between, I don't know, I would say like small business people that aren't like so rich yet that they don't have to care about these kind of things. But those of us that are still sort of figuring it out is around like what's going to get your highest rate of return. You know, a lot of talk around like the stock market. Stocks hit all-time high last week. And so there's all these sort of things. And then what kind of like spurred this line of thinking that we're going to dive into is I talked to one of my cousins who's in Europe, and they were basically saying that there are many stocks that are all-time highs in USD, but not compared to the euro. And so that took us down this rabbit hole of like, well, are the stocks actually growing, or is the US dollar actually just like decreasing in value that much that we are like watching the wrong thing? And what was this? Can you break this down in like the explain like I'm five version of what you sent over, Dylan?
Yeah, I'll do my best. So dollar dominance is it's common among political talk and I guess economics, but people think strong dollar, and if you think like strong, you usually think it's a good thing. That doesn't necessarily mean it's a good thing as far as like your trading partners, what assets are priced in and that kind of stuff. In fact, Trump wants a weaker dollar. So that way we look more lendable, we can import more, et cetera. So how this is kind of measured is called the DXY or DXY, but it has to be relative to something else. So the dollar versus the euro, dollar versus everything else. It's a basket of like the biggest currencies. So it's the euro, the yen, the pound, but the euro compromises almost 60% of that basket. And so it kind of depends on their exchange rate, what's going up, what's going down, versus how other things get priced.
Mm-hmm. Sure. Okay. And so I think like the big thing with a lot of this is that, you know, the US dollar, like the dollar index has fallen, 10%
year to date. Yeah.
So the value of the year to date. So it's fallen a ton. So that basically means that if you go back to like the world stage at the beginning of the year, the US dollar was 10%
was stronger. Yes.
Viable, was stronger than it is now. And the euro's not fundamentally stayed the same. And then I guess the big thing with this as well is you were saying that if you aggregate this over a very long period of time, gold and the dollar have fundamentally stayed like equal.
So no. So actually a good thing to illustrate this, to bring a third party into it, is if you measure the S&P 500 in dollar terms from 1980, you know, it's pretty much like up and to the right. Yeah, you can take out the recessions in there, but whatever. It's pretty much up and to the right, up to, so I don't know what it's at, but almost like 6,000 today. And if you looked up SPY, sure. But if you were to take that same S&P 500, which is like basically by market cap, and you price it in gold as the denominator instead of dollars, it's basically been flat for 45 years because gold has gone up just as much as the S&P has in that same period of time.
Yeah. Interesting. So I think like the big sort of takeaway, and the reason I want to talk about this is because there's kind of this whole, I don't know, old mentality, right? Of which does fundamentally make sense about how you don't want to be in dollars. You want to be in assets because assets will go up, you know, while the dollar kind of like does its thing. But how does that start to like matter when the assets kind of like either stay the same and the base value that you're comparing it to, i.e. the US dollar, starts to really like lose value? you know, because like, and specifically in terms of real estate, you hear tons of people that say like, I just keep buying real estate, so I'm holding assets. But if your real estate values stay the same and the value of the dollar you're comparing it to fundamentally drop an immense amount, like that is also equally bad.
I would view it as the dollar has lost its purchasing power, which is like you're kind of tying in inflation here. Basically, since the formation of the Federal Reserve, which is in 1913, so over 100 years ago. And we didn't have the dollar as reserve currency until 1941, I think, which is the Bretton Woods Agreement. And that was still backed by gold. And then that wasn't off of that until 1971 when Nichols, and that is like since been the Forex market, like dollars versus everything else. And since 1971, the dollar has been the premier currency around the world. Okay. But now people have been calling for like the death of the dollar for a long time, right? Like it's happened in 2008. Like they started QE. Everyone's like, no one's going to want dollars. But the fact of the matter is like the dollar is still what they call the cleanest dirty shirt of all the other currencies, because what's going to replace the dollar right now? It's not the yen. It's not the euro. It's not anything else. So there's still a flight to dollars. And I think we're a long way away before people stop using it. But if I'm looking from a 50,000 foot view, I think the weakness in the dollar is a trend that is going to continue. So I would rather be in assets like real estate, like Bitcoin, like gold, like even like fine art. So like things that can't be printed by the central banks are things that are probably going to go up more than the weakness of the dollar.
Sure. Yeah. Yeah. Which, you know, like reflects a lot of the general views people have had. I don't know. I think overall, just big picture, the one thing that is completely, I would say like exponentially scalable is just investing in yourself and learning how to like make money. I would say like now more than ever, that's so important because, you know, we're already seeing like more and more millionaires every day, right? Expenses on things are starting to increase. The value of the dollar worldwide is getting worse. And so you just got to kind of like get to a position where you're so wealthy that you can deal with it. Because if you're kind of like reliant on linear growth at this point, you're just going to get fucked because we're experiencing essentially exponential decay.
Yeah. And, you know, people go back and forth, like, you know, they wanted that $5,000 a month in income to replace their W-2 or whatever. One, we know that's rather difficult with rental properties, but two, like $5,000 isn't going to get you much in today's world, especially if you live where like you live, or even where I live. That's really not that much.
No. Yeah, it's crazy how much just like basic stuff is increasing costs.
Hold on, I'm going to put this route. If you had to guess what, I'm going to go back to 1971 when we went off the gold standard, what $1 million would be adjusted for inflation today?
$1 million just for inflation? Yep. 3.7.
So it only goes through May of 2025. And this is through the Bureau of Labor Statistics. So this is government data. Basically 8 million, 8077.
That's crazy. Since the
71.
70s.
So basically, if you were a millionaire in 1971, you'd have to be equivalent worth of $8 million in the bank to be the same purchasing power as 50 years ago.
Which is insane to think about. But like, if I think about the rich guys that I know, like the guys that are worth, you know, let's say 10 million plus, they typically live the lifestyle of what I thought a millionaire was when I was a kid.
Right. Yeah. No, that's a good like data point.
Yeah, completely subjective data point. You know, they like have the you know, the big house and like the multiple houses and the vacations and like everything like that. That when I imagined a millionaire, like when I watched Home Alone as a kid, and I was like, what the fuck does Kevin's dad do? Like that's the guys that do that are now worth 10 million plus. They're not worth 2 million.
And those are the ones like, I don't know. You want to do this when you're hopefully in your 30s or 40s, not necessarily when you're 60 or 70 years old and you can't really enjoy the fruits of your labor much anymore.
Yeah. So that's why folks on that massive income, not just the passive income piece, because the passive income isn't going to be worth that much anymore, especially when it keeps getting stripped away with taxes.
I was at that GoBundance event not too long ago. And one of the takeaways was, one, they have like much bigger problems than I do, because this was more for champions, even though I'm not part of that group. But they had like a little round table there at the end too. And basically their like, fuck you money number is 25 million. Is they're basically based on, I can make a 4% net rate of return on basically my net worth. somehow to make $1 million a year.
Yeah. Yeah. Which is a lot. Like, I don't know how you live your lifestyle, but for me to spend $1 million a year would be like an extreme stretch. Like, I already kind of do everything that I want to do. Like, I can't imagine like 5xing my spend, more than that, like 7xing my annual spend.
No, that would be a huge jump for us. Probably about the same.
Yeah, I'd say some people would say I don't think large enough, but I don't know. I live in a nice house. I fly first class to Asia and Europe. Like, I don't have to worry about stuff. I don't know. I would have to just be kind of frivolously spending money on bullshit to spend $83,000 a month.
Well, see, when you break it down per month, that actually seems pretty crazy. $80,000 a month.
It's insane, dude. Like, what are you buying? Like, I mean, you think about this, right? Like, spending $1 million a year. If you go and buy like a Ferrari for you and your wife, like a $200,000 car on financing, what's that monthly payment going to be? Like $6,000 each? Just fully guessing. Let's say it is. That seems maybe high, maybe a little high. That's $12,000. Yeah, so that's $12,000 just for the cars, right? You still got $65,000 to fuck around with after that.
Yep.
On your $1 million a year.
Well, one of the first scale things that we did, Mike, if you remember the first KeysCon, we did like that goal or dream setting exercise, or like your ideal life. And I've done it a couple of times now, but I think me even like stretching, it's like $300,000 a year. And that's like me trying to come up with shit. Right. So it's a lot less than I think people think, unless your goal is to fly private, all the time.
Yeah. It would be interesting to like see what that exercise, like do that exercise across like generations, like if you had say a Gen X and then like a millennial and then like a, Gen Z or like a younger person, how those like expenses and budgets kind of shift. Because I would bet you that millennials on average are the lowest, just because they do tend to be very experience focused and not super consumeristic. Gen X people that I know anyway, they tend to be a lot more into like, I want to have like my vacation home at the lake, and like I want to have my boats, and I want to be able to do all this extra stuff. And then Gen Zs, I don't know what they spend money on, but I do know that there was a survey that went around that said that they considered a good income, not high income, a good income to be like $560,000 a year. Did you see that? Yeah. So like they obviously are looking to spend money on something.
I wonder if that's just like, they don't even know what shit costs.
They're just ignorant, right? Yeah, that's it. It's like Bill Gates trying to say how much a gallon of milk costs, and they're like $11. I don't know. That's what it costs me because I order it off of fucking Instacart.
Yeah, but there's a point to like, okay, we're talking about like the fat fire or like the people who are worth a shit ton versus just the financial security. Whereas like the past, I bet 2 months, we had to replace a hot water heater in our house, a washing machine. My car got a flat tire. And I think there's one other thing I'm missing. So like 4 like larger ticket items, probably over $1,000 each, where at least we're in the position where we're like, yeah, this sucks and it's annoying, but I'm not worrying about my next paycheck that comes in to pay for it. So it's just like the financial security versus the financial freedom.
Yeah. So there's the financial security, there's the financial freedom, right? Where you can, live your life without having to think about it. But then there's like the financial abundance piece, which I do think that, especially in like the GoBundance world and different things, people do kind of get into that where they want to be able to like give a certain amount where it's like meaningful or impactful. So like, for me, I'm in a situation where like if there's a cause that comes through or something I believe in that's cool, and they're like, oh, do you want to like give money? I can give like, a couple $1,000 and like not think about it. Right. If I feel good about it, I like it. That's fine. I'm not doing that every day, but a few times a year, totally. But like there is a level where if people want to be able to give like, have a foundation where they pay $50,000 a year for something, that's a whole other ball game.
I don't know, man. It's just like you dream big, and if you don't get it, you're still better off in a better situation. So
yeah. And I will say that whole discussion, that is assuming you're not paying taxes.
Yes.
Right.
Yeah.
But so, cause like if you're making $1 million a year and you are paying taxes, you're down to what, $600,000 probably?
7 if you're.
Yeah. So either way, you still have $55,000 that you need to figure out how to spend on a monthly basis, which is, more than what my starting salary was out of college in a whole year. But yeah, I don't know. It's interesting. I think that just focusing on that income piece though is more important now than ever. And what's funny too is I do feel like there's been a movement towards that with like, the rise of like Alex Hormozy and like this business buying and a lot of those sort of things, which is kind of interesting because when I got into real estate back in the day with Bigger Pockets, everything was around like financial freedom. But now with like the small business buying stuff, you're starting to see a lot of push towards like making like real money, right? I also think this is why you've seen the rise of like the sales gurus that are like the worst thing to happen to social media ever, like the Andy Elliott's and those sort of.
Wasn't there one the other day that we sent amongst each other about a guy like basically like, don't ask me if you need a ride to work or can't use a bathroom or some shit. I don't remember.
Yeah. So he has like a door-to-door sales team. And so basically what they do is they go and they drop everyone off in their like areas that they're canvassing the neighborhoods, right? So they're going knocking on doors. And his whole like video, which he recorded and decided to post, like this is where, they have real bad decision-making skills, was essentially saying that if one of the people needs the bathroom, that they shouldn't call to go and be picked up and go use the bathroom because it's not worth his time to go and like take his staff member to like take a shit or whatever. Right. So and then like the point he was trying to get to was like, just tell your staff member to order an Uber. But like, okay, we're getting down to like the basic level of like human function here. It makes sense if you're doing things like that and there is like a level of, I would say like wasted time and money or something there. But like, come on, like be realistic. You're basically like what it sounds like is you're telling your sales team to just like wear diapers when they're out there walking the neighborhood, but we're starting to see a rise of like that kind of content. And it's because the message is talking about learning how to get rich as opposed to learning how to like have financial freedom again. And I'm wondering if that's like just the new generation, that's kind of what they vibe with, because millennials were so lifestyle driven that the financial freedom message really drove them. It's fascinating to sort of like see it all sort of come together. And I think that it's a sign of the times where, people are looking to have more than just like comfort, right? I also think there's a lot of millennials now as well that they've probably reached like some level of financial freedom, but they're quickly realizing that the financial freedom that they reached like 2 years ago is no longer valid just with the rising costs.
Yeah.
Because that's like the big thing that whole like FIRE model with like the 4% rule and everything else doesn't account for is a rapid devaluation of the US dollar and inflation.
Yeah. And if anyone who wants like a deep dive on this, I mean, one, you could DM me and we can try to talk about it, but there's like a couple big, very big themes out there. Ray Dalio is like known for his long-term debt cycle. And there's another demographer, his name is Neil Howe, and he has something called the fourth turning. And putting two and two together, there's probably a reason why they think that the long-term debt cycle coincides with what Neil Howe would describe a fourth turning, which is this increased populism, basically the bigger wealth divide and everything that we're going to go through. And full transparency, it sounds like it's only going to get worse for the next couple of years. And then there is hopefully the first turning on the other side of this, which is would be more in line with like the early like post World War II, like we brought industry back to America, all this kind of stuff. But
the problem is for there to be a post World War II, there kind of has to be the World War II event.
And I'm not disagreeing with that. I actually think that's more likely than not.
100%. Like there has to be some kind of tipping point. It won't just like naturally go back towards that. If you look at most times in human history where there's been like a big, I would say like rebalancing like that, there's been some sort of major event, whether it's like the French Revolution or it's World War II or it's, I don't know, there's lots of other wars.
Yeah, they've all been kinetic wars lately. I mean, if I had to put money on it, which I'm not calling for this by any means, it would be something to do with Taiwan, China, and the United States.
Maybe. I don't know, dude. I think like China is just in such a long game right now. What's actually really interesting, having just gotten back from Europe, is how much adoption you see of like Chinese technology there. Versus here, you don't see any of it in the United States. So like the big thing there is cars, right? So I was there with my uncle. They're looking at getting an electric car. They are getting a Chinese electric vehicle that looks very similar to a Tesla, honestly. And it costs about I don't know, 50% of the price. It has a nicer interior. It has better distance. Everything else about it is like, it seems fundamentally better. And that is their choice of car that they're getting. And, and then very coincidentally, I had this conversation with them like 2 weeks ago. I saw this article today talking about Chinese technology and how it's getting more and more popular throughout a lot of the large parts of Asia and Europe. And, how vastly more advanced they are than US technology. Well, China and so like, I don't think it'll necessarily be like a kinetic event. I really do think that there could just be like a slow burn where the kinetic event, I think in the US might just be like an internal fucking thing. And everyone else just goes, see you nerds over there on your island. You're so far away from all of us. We don't have to care about you, and they just kind of do their own thing.
It's funny because Tesla makes a lot of their cars in China.
I know, right? Dude, they're probably just skimming the parts off the top of the pallet.
Probably. Look at those free materials.
Like why? That's what they've done everywhere else.
Yeah, stolen IP, all this kind of stuff. And I don't want to get down the China rabbit hole because it's, dude, and I listen to a lot of content. I listen to a lot of podcasts. I read a bunch of articles. And I'll read one and be like, that was so sophisticated and well thought out. That makes a lot of sense. And then I'll hear a complete 180 view and like, that was real thought out. That made a lot of sense. And it's very hard to differentiate like, okay, which one do you actually think is more probable?
For sure. Yeah. I don't know. I think that just in general, it's, any country that has like a massive degree of separation between the majority of the population, like will eventually have major issues, like the best countries are ones that are homogenous in some way. And even places like China, right? They are a communist country, but the people there are all kind of like the same. And they have a large enough population that has money that they can just sort of like not care about the 800 million people that don't. Right. So there's still a power imbalance, but it's like the ones that are in control and are, producing, right? I think that's the main thing is that they have enough of a population that can continue to produce despite that. Whereas like the US does not.
Let's talk about failed syndications.
Yeah, I know this has been a hot topic as well. With all the Brandon Turner deals we've been seeing go sideways. So I guess on this deal, you sent over a little screenshot, and it's several of Brandon Turner's Open Door Capital deals completely collapsing and people kind of losing everything. And so on this one, the one that you sent, invested $55,000. This has been a disappointing experience. There is a webinar scheduled for the 24th to discuss the current sales performance. NOI 50.765%. And so it sounds like people are
basically, and what I got from that is, and from reading further comments that you don't have access to, is at this point in the life cycle of this deal, they wanted to be like almost 80-90% to the projected NOI, and they're at 50.
Yeah. Well, I mean, here's the real thing with this, right? Is like it's getting extra spicy because Brandon Turner was involved and kind of like raised money. But like if they're communicating and the assets underperformed, that's one thing. At the same time that this is happening, there's also guys that were relatively big names that have literally just like stolen money or lost everything and then like jumped ship. So, I mean, if they're still moving forward as, they're allowed to do and they're communicating, I don't have a ton of hate.
I don't have a ton of hate either. A different one that I'll have to send you. And again, this is from Reddit, so who knows the actual legitimacy of all of these. But I'll read this. Yeah. I was reading this is from a commenter. I was reading their details of their cash flow fund 2. I saw that they could use the money raised in this fund in their previous funds, which led me to this post.
Nice. That's
the little sketchy. So like, are you raising, it basically sounds like almost Ponzi-ish, right? Like if you're raising money to fund the previous deals.
Yeah.
So, and again, like I don't want to talk bad about Brandon Turner because I don't think there's any disingenuous part of this. He probably thought he was doing everyone a favor by, indicating or doing these deals. But even in GoBundance, they kind of differentiated these in between what good operator or good person, bad deal, bad person, bad deal, and just straight up crooks, right? Like,
yeah. So for like not that long ago, probably 18 months ago, there was a whole call for guys that were invested in an open door capital fund where they talked about how they had just done a capital call where they needed to raise $6 million to cover the gap fund on an adjustable rate commercial loan that was changing, right? Like in order to keep the loan current at the reserve amount that was required, they need to come up with $6 million to, pay down the lender or whatever they needed to do. So that's how far off like their whole number was in that. And so I remember when Brandon came in, like did like a pitch on one of those calls because they were desperately trying to come up with the $6 million to bail out this sinking ship deal.
Do you know, like an LP, are you obligated to help fund more of the deal? Like, is that in your LP agreement?
It depends. So they can't force you to take money, right? Like, but what it can look like is if you don't do it, you'll essentially forfeit your equity or shares.
Wow.
So, but they can't go and log into your account and like pull money out directly. But it's in your best interest to do so a lot of the times. But you do need to make a judgment call, and if it makes sense. Like, are you going to walk away from your losses now, or are you going to contribute more money and your loss will be greater? That's kind of the ultimatum that you have to decide. And it's like, it's hard because I think that when people are new to these kind of investments, what they are essentially sold and how they go into it, especially if they are somebody that has never lost money before, they're like, oh, I put it in and I'm going to get a 2% equity multiple in 5 years. I don't have to do anything. That's amazing. Right. And then all of a sudden, when that doesn't turn out that way, people get very, very upset. But there is a fundamental risk in investing, right? Like, especially when you're doing something like that, where you have no secured debt, even if they write a promissory note or something else, they can declare bankruptcy and you get nothing. Yeah. I don't know. It's a tricky thing.
I think I'm more surprised I would have assumed that Brandon specifically would have had the people around him to not be this far upside down or sideways in a deal.
So, but here's how it goes though, dude, is, he's a human being that became very, very successful very quickly. He's fundamentally a young guy too, right? Like, I think he just turned 40. So I would honestly say he probably lacks wisdom, just because he has mostly been around since the last big issue, right? Like back in 2008. And so with that, how those things normally go is you become a person of influence. Everyone comes in and says like, oh, you should come partner up. We'll throw you some money here. We'll give you some equity. All you have to do is just like speak about it. We'll give you this thing. It's going to cost you nothing. You're going to make all this money. And that happens. They go well. Then all of a sudden one person comes in that's maybe less well-intentioned, less experienced, doesn't quite have the ability to get these deals done. They break into the ranks on that. They pitch him the same thing that he has now heard 15 times before. He agrees to it. And now his face is on it, even though they're the reason that it's going down.
Yeah.
Like you hear this shit over and over. It's like the whole situation with Ryan Pineda and the NFTs. I did a whole like Friday Focus YouTube video about that. I do think that Ryan Pineda is kind of a criminal. But there is an argument to say that when that happened back in 2021 or 2022, whenever that was, he was a person with a big following. And these NFT bros who, shocker, are criminals, right, came and said, hey, Ryan, we can make a fuck ton of money if you do this NFT project. You want to be a part of it? And he went, hell yeah. Just signed the dotted line without even understanding it.
We're going to rug pull all of your audience, but who cares?
Yeah, totally. And then by the time it all comes crashing down, the guys who kind of had nothing, they've made their money, they've rode off into the sunset, and then the one who was the face becomes the scapegoat of it. And with Open Door Capital, I'm not saying that it's quite that extreme, but I mean, I'm sure that there are some situations that are similar to that have played.
I think, and I don't know if it's this way generally for millennials, I would think specifically for Gen Z is there's almost like this, it was coined financial nihilism on a podcast that I listened to, which is basically like they've given up hope on ever being able to afford quote unquote the American dream or being financially secure because it's nearly impossible to afford a house nowadays. Everything's fucking expensive. Wages haven't kept up over the past 20 to 30 years in line with those increased prices. And so the reason why they go further on the risk curve, or they try to make it on a meme stock, is because like, this is the only chance I got. Right. Like, and so I think there's something to be said in that general instance that goes along with everything that we just said earlier.
Yeah, I mean, there's probably a lot of things there. I think there's the impatience piece, and there's also a like the fact that social media just only feeds you people that like have gotten lucky and made the big wins, right? It makes you feel like that's normal when it's not.
Well, if you want something that's tried and true, you can join Scale, and we'll teach you how to make at least 20 grand a month.
Exactly, right. And that's the crazy thing too, honestly, is once you kind of understand business, like how easy it is to make like a good income. Like to make like big money is hard, but to realistically replace any W-2 salary is not challenging, especially in the real estate world where you are trading expensive things that have a lot of room for profit margin.
Yep.
Like it, and whether it's the real estate itself, whether you're getting into lending, whether you're a real estate agent, like whatever that is, there are large portions there for you to capture on every transaction. And it feels very, very challenging when you're getting started because there's lots you don't know. But it would actually be an interesting statistic to see, because there's always a lot of talk around how many real estate like realtors and stuff fail. But I would bet that if you were to take the number of people that start in like real estate or real estate investing over say like a 10-year time horizon, you take that versus any other business, you take all the newbies, I would bet you that there is a higher success rate for real estate people than probably any other business.
I would agree with that. And then if you start out wholesaling, I mean, you really don't have a whole lot of risk at the beginning either. You're not fronting a whole bunch of capital.
Yeah. Especially if you're willing to like work and hit the phones and do the hard stuff. We've had people that come in and get started with almost nothing, and then they're making $20,000 like 3 months later, and they're like, "Holy shit, that was crazy!" And then they do it again, and they do it again.
There is speaking to your like thing of business too. There's like I don't know if you know what Nextdoor is. It's like the Facebook for old grumpy people. Anyway, there's someone posted like, I just got an HVAC quote to get a new furnace and AC condenser and got quoted 25 grand. Is this a good price for my house? It's this many square feet. And I'm like, I could call my HVAC guy, say, hey, we'll do it for 20, and I'd make 10. Like, like that just shows the difference of like the stuff that's out there too, and the margins that motherfucker's trying to get.
I know, right? But like, point being is it's so easy to kind of piece that together once you know kind of where, like how to create value and where it exists and just a basic level of selling, And the cool thing is once you know how to do it with one business, it's very easy to do with another, right? Like, so with like our SLA Capital, our lending business, from in March of this year, so was that 4 months ago, we had our best month ever, and we did $8,000 in like actual profit,
nice,
off of points and fees, right? In June, we just did 52,000.
That's fucking awesome,
right? In July, we're going to do more than that with what's on the books already. Okay, but it's because we know how to create value. We've built the network, right? We know how to run a general business and processes and piece things together, and we have like the knowledge in the industry to be able to like combine everything and have it be somewhat efficient. And so realistically, that business will do over $1 million next year. I'm sure probably $1.5 million to $2 million, because we already have like the basis of it built out, and we built out that skill set. And so that's why you hear these people talk about how the first million is the hardest. They're not talking about like that in like a linear fashion for you. It's talking about learning how to create that first $1 million because you don't have the skill set yet. It takes the most time, but once you kind of understand, it's significantly easier to do that.
Yep. Hormozi's actually frame around this is like your cost of not making $1 million a year is just the difference between that $1 million and whatever you make now. So if it's you make 100 grand, that cost you is $900,000.
Mm-hmm. Yeah, which is true. It's funny. It's a very like, I don't know the right word. It's something that sounds like so douchey, like so easy to say, like when you're like a rich person, right? And when you're like new and like you can't even fathom that, it just sounds outrageous. But it's totally true. right? And the opportunity comes down to like, if you spend 5 years making nothing, and then in year 5, you make $1 million. You just made $200,000 for the past 5 years. You made nothing. That's pretty damn good.
Yeah.
Actually,
real quick before we log off
too
and switching subjects again, let's talk about the flip that I just closed on today. Actually, that I put in the Slack channel, because I think it provides good context. So for the audience, basically, I bought a flip in January 3rd of 2025. We are selling it today, and the net profit, post or pre-tax profits like 35 grand. And it was 50 grand, but we had a couple things with this where we only had 2 showings. One of those showings made a full price offer, but then they had their inspection, and basically at the inspection, they wanted a lot of stuff done. And I didn't feel like I was in a position to really like lean back on anything that they were requesting. The biggest thing being a new roof. So long story short is I put 20 grand into the post-inspection items, which brought, from 55 down to 35. Point being in all this is this was a 6-month hold. So making about 27,000 post-tax. That's $4,400 a month that I made, and that, for the risk that I put up, we sold it for 275 grand. Is that really worth it? And, we're the dialogue we were having in the group is it probably wasn't, but what do you do in that instance? You keep going.
Yeah. Well, you have to, but I like the way that you frame that though, where you said you made the $4,400 a month, right? Because if you tell someone, it's like, oh, we're going to flip a house and we're only going to make $26,000. That sounds terrible. Yeah. You're like, why would we do that? But then if you frame it as like, well, technically over it, we made $4,700 a month. If you go to the average person, like we talked about the show, who's trying to make, $5 grand a month in passive income, you were pretty damn close.
Yeah.
Right.
Well, I had a lot of the risk.
It's fundamentally the same thing. Yeah. Yeah. Well, you have a lot of the risk when you're going and buying property to try and get that passive income too. You just don't realize it yet because you're ignorant, and that's still your goal. So I guess with all that being said on this, we had like a whole massive conversation in our Slack about it. Breaking down like your cost per hour and all these different things. Would you do it again? Or what would you do different next time?
I will say I do it again, but for a more intangible side of it, where I got 2 new like contractors / like subs that I will probably continue to use on future deals. So sorry to put a dollar amount on that. What I do differently is, I'd probably buy it again. But what I tried to do at the beginning of this one was pretty much just list it immediately. And when it didn't sell the first time, we took it back off to do the rehab. But that took 45 days of extra holding costs.
Oh,
yeah, right. Yeah. So that was a big chunk.
Yeah. I mean, it's always so easy to have like a game tape until but once the game actually starts.
The most I would have made trying to wholesale it was $5,000. So like, I maximized revenue, which was the kind of the goal I'm trying to do this year. But at the same time, you got to look at it from both sides of the aisle. Like, I don't know if I would not consider this like a great deal at this point.
No. But, base hits are what keeps the business going while you look for the great deals. That's kind of how the whole industry works. So cool. Awesome, man. Well, thanks for hopping on with me. Right on, guys. Thanks for listening. You should go and subscribe, share the show with your friends. It helps us continue to grow. His word of mouth, especially these days, man. Podcasts are freaking hard. It's funny. I know the podcasting world is getting tricky because every podcaster that I know is like super diehard on freaking YouTube right now. And oh my God, dude, I can't take any more like pictures on my Facebook feed that are like 47-year-old men making fucking Mr. Beast faces on YouTube thumbnails. I'm like, can we stop this, please? So cringe for me. What I'm talking about? Yeah. I know you've seen the same thing, dude. So it's terrible.
I don't even lie. Just like keep scrolling. Don't even lie.
Yeah. I know. I'm like no one wants this. Like, I know you got one video that like a bunch of people allegedly watched, but no, they didn't. I'm sorry. I don't know. So cool. Anyways, guys, we appreciate you listening. We'll talk to you guys next week.